So do mortgage rates have you down and you're not sure that you can actually afford a home? Stay tuned for these tips, and this can help you get into a home in 2023. So mortgage rates have gone up over the last 12 to 18 months, but that doesn't mean that you can't afford a home. There are many options out there to help you. Let's go over a couple of those just to give you an idea that you can get a mortgage and that you can afford a home even with the current interest rates. So let's look at some rates real quick just to kind of give you an idea of the difference between some different rates. You look at this. So looking at this, you can see that a 6.25% interest rate is going to be a payment of about $1,847. And then a 5.25 is going to be about $1,656, which is going to be $190 a month difference. So obviously, that can make or break somebody's budget. So what can you do to really afford a home that may be at a higher interest rate? The first thing that you can do is look at paying debts off. Maybe you have a credit card or you're close to getting a car payment paid off. Maybe it's time to look at paying those off and putting less money down on a home. And you would end up, and did you know if you put less money down on a home, you actually can get a better interest rate? Yes, you're going to pay mortgage insurance on that loan, but eventually mortgage insurance on a conventional loan is going to fall off. So if you're looking at getting a conventional loan, look at paying some debts down to help offset that monthly outgo that you may have. Look at your insurance. Insurance is a hot topic right now because insurance costs are going up. But what can you really do to help that? One is to raise your deductible. Now, I know that can sound scary to some people, but listen, if you raise your deductible, that's telling the insurance company that you're willing to also take part of that risk on insuring your home. So look at that. Maybe that will help you, but that's something that you really want to discuss with your insurance agent. Maybe the coverage on your home is more than what you need. Maybe you don't need to have all of your contents covered to the maximum amount. That may be an option for you to lower that coverage for contents on your home, and then you'll have lower insurance costs. This is a great opportunity in this market to look at seller-paid closing costs. The market is not what it was a year ago or 2 years ago. So buyers have an opportunity to go into a home and instead of reducing the purchase price, ask the seller to pay closing costs. And in that, you can look at getting your interest rate bought down, maybe to get a lower rate instead of getting a 6.25. Maybe you can get a 6% interest rate, which is going to save you money each month. Maybe you can look at a 2-1 buy down. And what this is the seller is going to pay closing costs, but they're going to pay to have part of your interest on your mortgage paid for the first year and for the second year. So the first 2 years, you actually have a lower mortgage payment than what you would normally have. So it's a great opportunity to look at getting a lower monthly payment. So it is a great time to buy, but the first thing that you've got to do is make that jump and fill out the loan application. You can click on the links below and that will give you an opportunity, no cost, no obligation, to find out exactly where you are. Do you need to maybe work on your credit before you purchase a home? Listen, there are opportunities out there right now where you can purchase a home with a credit score of 580. I don't recommend you take those. I recommend you look at trying to get your credit score higher so you qualify for a better loan. You should at least have a credit score of 640 before you start shopping for a loan. Now, sometimes those 580 credit score loans will work out to your advantage, and we can discuss that. But if we can get your credit score higher, you're going to qualify for a much better loan, and that's a better opportunity for you being a homeowner. Maybe we need to look at budgeting. I have some great options that you can look at to help you learn how to budget so you can afford a mortgage. Because if you're going to buy a home, we want you to be able to afford that home and make those monthly payments. Make sure that you have your documentation in line. Have you been in the workforce for 2 years? If you haven't been in the workforce for 2 years, have you recently graduated from college? Because college can count towards your work history, and we need a 2-year work history for you to qualify for a loan. So have you been at work? Do you have W-2s? Do you have your paycheck stubs? If you are self-employed, you're going to need 1 to 2 years worth of taxable income from your self-employed business to qualify for a home loan. So if you are unsure of that, get your taxes filled out. Send those taxes over to me and let me take a look at them to see if it's an opportunity for you to purchase now. Bank statements. All lenders are going to want to get 60 days worth of bank statements. Sometimes that can be done online. Sometimes you have to send in those bank statements. But you need to make sure that you have the assets to even purchase a home. Where's your down payment going to come from? Where are the closing costs going to come from? These are questions the lender is going to ask to make sure that you're ready to buy a home. So if you do have any questions about getting a mortgage, please feel free to contact me. My contact information is below with my phone number, or you can reach me via email. I am here to help you to get into a home loan in 2023. Thank you for watching my video. I've added these 2 videos for you to watch next to help you on your home buying journey. I'll talk to you soon.